Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are talking about. I'm going to interject my financial opinions all across the board. We're going to look at finance related stuff, stock market, commodities, wealth building, and maybe even some other random stuff that I throw in the middle and give my opinions on. And I think the first half, there's one that is about cars or something like that. So we might cover that a little bit as well. So if you want to follow me, you can follow me at finding_finance. And if you guys need any help with anything, check out finding-value.com. That is where we go over individual companies. Um, what I do, just big picture view, real quick, I take the real estate cycle, find out where we're at in the real estate cycle, which we are still in the expansionary phase of real estate, which is a commodity bull market based off of the credit that it gets expanded from the loans in the system. And that uh, commodity bull market ends when we go into a hyper supply phase of real estate. I look for the most leveraged plays in the commodity markets, and I also look at the dividend payers. So I kind of take a dual approach, and then I also have some speculative stuff where we can really get the juices flowing. All right, so let's dive in here. Let's take a look and see what's going on. The first one is uh, so Disty on the verge of so distillates on the verge of dropping below the 5-year cloud on a somewhat surprising draw at this time of year. We are very low in terms of distillate stocks, U.S. distillate stocks, very low. Coming on down. So this is the one that is about the car. He said, I've seen a lot of why you should drive a Camry even if you're rich on Twitter lately. I wholeheartedly disagree. Here is why. I had a wealthy friend who was on the fence about getting a Ferrari for 4 years. He could have easily splurged on it. He'd go back and forth about what he could do with the money if he invested it versus getting a Ferrari. Finally, after 4 years of literal back and forth, he decided to buy one. We went to look at some at a dealer one day. He was diagnosed with cancer 2 weeks after that and died 6 months later. Business connections. You have lunch, coffee, meeting with a potential business person. They roll up in a Mercedes S500. You roll up in a minivan. Sends a subtle message to the guy on the other side of the table. It's like showing up to a corporate board meeting in a crappy fitting suit. Enjoyment. If you have tons of money, there is some level of satisfaction and accomplishment that comes with cruising around in that high end car. I bought my first Ferrari, a used 430 Spider, after my net worth went from 1.7 million to 650,000 following my divorce. I was in a kind of F it mode kind of mindset. And looking back, it was one of the best and most memorable decisions I've made. I had been obsessed with exotics since I was a kid and had Lamborghini Countach and Ferrari posters all over my walls. Was it the wisest use of my money? Probably not. But the enjoyment I got ripping through those curvy, desolate roads after a stressful day paid dividends to my psyche. It's all personal choice, but I'm a firm believer in enjoying the fruits of your labor. You don't know when your clock runs out on earth. If the corporate world I saw, so many of my coworkers worked so hard to get to 62 and retire only to die in their late 50s. I'll never forget my friend's regret when he was going through chemo of not pulling the trigger on a Ferrari 4 years prior. If there's something you're on the fence about, if you have a decent net worth, what are you waiting for? And this is his 488 Pista Apparata, whatever it is. So I'm a big car guy, guys. I'm a big car guy. I do like tons of things about cars. I do own rotaries. Now, my net worth is probably more than what this guy has when he bought his Ferrari. It was, I don't even know what my net worth is, to be honest, like the exact amount. It's probably where that original number is that he stated, I'm guessing. Somewhere around there. Not that it's a big deal, but net worth is not, it's tied up into things. It's not all cash flow and stuff like that. What I enjoy and what I like to spend money on is the actual act of driving. Um, I think, take it for what it's worth, that a lot of these other cars, they're just status symbols. I'm not necessarily into status. I'm into driving. I want to drive. I want the performance. I want the braking. I want all of those things. But much like the name of this channel, Finding Value, I find it in the things. I find the value in things and extract as much value as I can. I can probably put together a car for 20 or 25 grand that can beat this Ferrari here for that price. What it would be is an RX-8 with a swapped engine in it. It'd be probably a rotary of the FD RX-7. Swap that in. I can do all the work, throw the turbo in, do all that stuff. No, I'm not going to do 20-some thousand for you guys. That's parts cost, and my work into doing it would be much more than that. But I could easily put aero on the car and do all of those things. And that's probably something that I'm going to do and approach and fabricate a lot of the parts. It just takes a lot of time. Driving around in these expensive cars, it's not any more fun than doing one that's cheap. I've been in a lot of these cars. I have driven not a lot of them in terms of driving, but I've been passengers in them. Would I say that a Porsche GT3 or GT4 is worth it? No, because I can make a car faster for a fraction of the price. It's hard for me to justify it. It's also more fun to take a car that's not as, we'll say, not as capable in the perception of people and rip the car with more capability and more cost with something that is much cheaper. A car is the sum of its components, and the components are really what makes the car fast. It's really just comes down to a few things. Weight. It's really weight. Weight is number one. Obviously, tires and how this thing grips. You got to have really good brakes. You got to have enough power to basically keep up with the big boys, whatever power that is. And they need a little bit of aero to help you on the way. That's really it. Everything else, it's pretty much you're just spending for a name. So you can get a really well designed car, like a good layout, so to speak, with good bones, and put the components onto it. Maybe I'll do that for the heck of it. Maybe I'll decide to do that and show you guys what I can do. Maybe I'll make a front splitter, put a nice little rear wing on it that sticks up kind of on the deck there. Put some carbon fiber parts. Really, what it's going to come to, what it's going to look like is it'd be an RX-8 probably chassis that you can get for cheap, which I already have one. Throw a FD engine in it. Throw a real small turbo that doesn't have any lag that you can get probably 400 or 500 wheel horse out of. And then you'd put the aero on it, and you put carbon doors on it. I mean, you could probably have the car only weigh less than 2,400 pounds with about 400 or 500 wheel horse. And if you got some aero to keep you straight, you can also put some big competent brakes on there as long as the brake bias is pretty good, which you can easily do that. And you have a pretty capable car. Very capable and be very, very fun. Maybe I'll do that for the heck of it. Let me know in the comments section what you guys think if I should do that or not with an RX-8. Coming on down, so we've got tech stocks are surging on nothing but hope, says general strategist Albert Edwards, and I agree with his assessment. Tech stocks have surged on nothing but hope, says a top market strategist who's been worrying about the future of capitalism. The reason I think it is because we are in the thick of a real estate market boom, and that is why interest rates are moving on up. And with those interest rates, obviously, there's a little bit of extra juice from the supply side of extra bonds being released. But that's going to put pressure on stocks in the overall stock market, or those interest rates that continue to go higher. It's going to pressure it lower. Coming down, it says bullish. 30-year mortgage just hit a new 22-year high, 7.22%. When do we start the new 60-year mortgage? And you know what? As weird as these people are saying, banks are going to find ways to lend more money. Whatever it is. They're going to do stupid loans again, or they're going to extend to 40-year, 50-year, 60-year mortgages. I really do think they're going to do that. They're going to find ways to get people into homes at ever increasing prices. Uh, this bull market is not done yet. If you were to look at it from the 14-year cycle from the bottom of the bottom of the market was 2012. You add 14 years, that's 2026. We haven't built the homes yet, so I'm not sure if it's going to last a little bit longer. Maybe we go to 2028. I don't know. We'll find out as we go. But it's not done yet, guys. We haven't built the homes, and the people are all out there. So now it's going to be, how do we get these people into the homes? They may get um, very clever on how to get these people in homes, and it could be longer mortgages. It really well could. Here's Gordon Johnson's. Wow, global liquidity was smashed lower this week. That is, the Fed's balance sheet fell 43 billion week over week, while the ECB's balance sheet fell 500 billion. BOJ's balance sheet fell 133, etc. So the balance sheets of all these put together and the S&P 500 basically follow those balance sheet expansions. But now we are contracting. We're contracting here again, just recently with the balance sheets. I think that will pull down the S&P 500 and NASDAQ with it. The R-squared correlation value is 98.4%. That is ridiculously good. That is a very, very strong correlation that you hardly ever see in nature even. So with that correlation, if we go down in the total bank balance sheet, I would suspect that the S&P 500 is going to follow it. Stock market, I said, is the 10-year yield going to continue higher or break back down? We've got yes at 43.6%, no at 12.8%, and no idea at 43.6%. So no idea and yes are the two leaders here. It says, there you go. That's more like it. U.S. implied oil demand has been surging higher here over the past week. So that's pretty strong. It's the 4-week average of U.S. products supplied of petroleum products. So it's surging higher on that 4-week average. Midweek update posted. Yields going on up, strong like bull. The 2-year rocketing on up. The 10-year breaking out of its pattern to the upside. And the 30-year also breaking and moving to the upside. I do think that interest rates are going to continue higher. I also think that the real estate market is probably going to continue higher with it. I know that doesn't make sense in terms of affordability, but affordability isn't what drives the home market. It is supply and demand. And it depends where that supply and demand and affordability all cross and how clever they are with their lending practices and how they're going to change mortgages. They could extend it. They could do these nothing down loans again. They can get pretty crazy. And then they'll blow out the top of the cycle again, just like they did in the last cycle, just like they did in the 1920s. So we'll see what happens. Per ADP, June private payrolls jumped 497,000 versus 225 and 267,000 prior month. Biggest gain since February 2022. Leisure and hospitality added most jobs since September of 2021. Likely to be the same seasonal adjustment issues at play, which flattered number like was case in June of 2022. So we have a large jump in payrolls, about 500,000 versus 225. And that is one of the reasons why interest rates are jumping up. At least that's what people are attributing it to. Product tankers. So we do talk about tankers. Low order book, low shipyard capacity, and theoretically, 38% of the world fleet needs to retire in the next 5 years. A repeat of the 2003-2008 bull market. So current order book of 8 to 9% remains low despite recent orders. There we are with the order book, very, very low. And yard capacity is limited, especially for product tankers. This is number of active shipyards, way down. Tankers building, tankers by building year. So we've got these, and these built 2004 and earlier, product 15% of fleet. Built 2008 and earlier is 38% of the fleet. So a lot of these are getting older. This is on order, 15.8 mil DWT at 8.6% of the fleet. So you can see a lot more are going to be retiring than what they're putting in for the new orders. Stocks only go up, bro. The VIX is dead, bro. The Fed will never let markets drop again, bro. This isn't 1929, bro. Yeah, bro. So here's the euphoria, complacency. I think that we just need to cool off for the next rally. I think this is where we are. Oh, he's got it right here. You are here. Yeah, I agree with that. We are in complacency. That is where we're at in the real estate cycle as well. And that's where the stock market generally is, given where we're at in the real estate market and where interest rates are going. And if we were to look at that, we've got our first pullback, and this is the one I talked about it before. I don't know where this is going to peak. We could even do a double top. We could even go a little bit higher, depending on the euphoria or the complacency that we get, which is possible. Bitcoin went up and did a double top. Sometimes they do a Batman pattern where they come down, they come up like this, they come back, and then they come back up again. It's a topping pattern that takes a few years. It takes time. This is the 2001. This is the complacency stage where you come up and then you roll over. I do think that this person is using the correct data and eras, in my opinion. He's got it completely 100% nuts on. And this is also the 1929. You can see we dropped. We had a first initial drop. We came back up, the complacency time frame, and then we really took off to the downside. I don't think that this is going to occur here in the 1929s. I think this is a much better description of kind of what it's going to look like. In 1929, that was a deleveraging real estate crash, just like 2008 was. 2000 is the middle of the real estate market. We went up in interest rates. It crashed the tech stocks. And then they lowered interest rates and the housing market took off again. I think it's going to be very similar to that setup of what we've got going forward for us. Grady says XME looks ready to yet again outperform the SPX up from the commodities bear market low. And above black line, we will see the metals and mining sector start moving strongly, I think. The second inflationary wave is soon upon us. That inflationary wave is going to come, in my opinion, from loans. And that's what we're going to look for. We're going to look at the housing starts. So here it is. We've got similar, the way this falls goes up similarly. You get similar sticking points. And commodities bull market started, which called in April of 2020. Yeah, that's where I got into, was this summer of 2020. And yeah, got to ride this thing on up. Here's XLRE, the estate. This is the real estate sector is turtling up and trying to make a massive golden trend line. They're trying to break out. Also, we have had a 3 times impulse lower lows. So 1, 2, 3. Then you do a kind of that lead-in pattern that I talk about, and this thing's ready to rip. So we're starting to see home builders and real estate sectors and all that stuff either put in bottoms and start to rip to the upside, or we could get a big old move from these downtrends in these sectors. This is the 10-year yield that Grady's posting. So it was like a shooting fish in a barrel. US yields and USD were topping with parabolic moves while gold was bottoming. Now the pink lines mean big inflection point right here. So here's gold. You can see gold's bottoming here. Yields came back down, and that's when gold took off. We are consolidating here in gold. The question I have is, are yields going to break higher, or are we going to get the Batman pattern where we break lower? I don't know. We're going to have to see. And the reason I don't know is because the 2000s, that pullback that we had was in a rough location of where we are in the real estate cycle. So we could pull back, we could get a slowdown in the overall markets, and it is very much possible, and we go sideways in real estate for a little while. Once we get this slowdown, what they're going to do is they're going to lower interest rates, and it's going to shoot the real estate market back to the upside. So that is where I don't know what's going to happen here in the short term. Are rates going to continue higher to hold down the housing market and basically pin it down through unaffordability? Or are we going to come back down from the slowness of the markets? Yields come back down, mortgage rates come back down, and then the real estate market kicks back up again. That's where we're going to have to find out. We're going to have to wait and see. Well, looks like I hit the wrong button there. All right, so coming back, we've got Grady here. We've got U.S. wages. Who remembers the 1970s? U.S. wages, if we look at this, go in there, 1970s was far higher here. This is the 10-year yields in the orange line. Wages and yields went up higher together. Then we had a very long period where wages declined, 10-year yield declined. We got to a low and wages started to kick up in 2017 or so, 2018, 17. We started kicking back up. We are kicking up for wages, and we've got the 10-year yield kicking up. So that there is more information that we're seeing a positive signal like the 1970s with wages increasing and also the 10-year yield. And that's where I'm going to end it. I think that's the last one. So that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Let me know what you think. Should I build a RX-8 with an FD engine in it? A lot of people are probably going to say, yes, it's not their money. I could do that. I could even work a little bit longer, kind of pay for all that stuff, which is fine, whatever. But that would be pretty fun. I think my driving skills are pretty dang good now, and I could easily extract everything out of that car that I'm already doing it pretty close, I would say, to extract a higher level car. So that would be kind of fun. We'll see what happens. I've already been collecting parts for it, to be honest. When people sell cheap things, I got a transmission for pretty cheap. It's $200. It's an FD transmission that a guy had, low mileage. He was moving and just wanted to get rid of it. So yeah, I'll take it. I've got a intercooler core sitting here that I can build, put end plates and all that stuff on it. Also, I have, what else do I have for it? There's a guy selling a turbo up north for a very good price. I sold him one. I used to flip turbos back in the day, and he's got a brand new one that he'd sell me for like cheap, like the best. It's a EFR 7670 internal wastegate, which would be perfect for the FD, for an FD. I would get a brand new FD engine to throw in. I just don't know what ECU. I can tune the ECUs too. Just don't know what ECU to run. But either way, guys, that's what we've got. I know I'm kind of blabbing there a little bit, but yeah, that's what we got. And we've got a 7 a.m. Mountain Standard Time on Sunday. I know it's a little bit different. So Sunday at 7 a.m. Mountain Standard Time for the question and answer session for the website. All right, guys, we'll catch you later. This is Finding Value.